And so today we're going to go through three different scenarios and situations that you're going to deal with. We're going to tackle some final expense scenarios, and then we'll also tackle some mortgage protection scenarios. They obviously have some overlap between the two, but the first one we're going to dive into is a person that says, I've already got enough in the bank. Like, I'm self-insured. I already have $30,000 put away. When I pass away, I'm going to be good. I'm taken care of. Now, they might also have $30,000 in another plan, and they think that that's sufficient, that they're good to go, that they've got enough in place already for their family. So how do you create the right perspective where they believe that there's a need for more coverage? And what you're going to see and find is a lot of these scenarios, there's storytelling, third-party stories to really kind of help transfer the thought process that you've got, the idea you have as far as them needing more protection and why, where you transfer that to them, they believe it, they see it, and now they capture and take that thought as if it's their own, and that's when they usually will move forward and take action because there's ownership in that thought as well. And so when you got a situation like that, this is how I'd handle it. So if I'm talking to Ashley, Ashley says, I've already got $30,000 in a bank account. I'm already good. I'm protected. I'm self-insured. I say, Ashley, listen, let me just tell you this. First of all, I do this, and I've done this for a long time. It is so uncommon to have a situation or for me to talk to a client that has actually made some great financial decisions early on and has put themselves in a position where when they die, it's not an absolute disaster for the people that they care about and love the most. It's just pretty cool. So I don't know if that's worth anything to you, but I just feel like I got to say it because I don't see it a whole lot. Good for you and really actually having some forethought in what it's going to look like and planning ahead and putting that $30,000 away in your savings account or getting that $30,000 plan 12, 15 years ago, right? Now, let me just pause here because I want to give you the psychology behind it as well. It's one thing to know what to say. It's a different thing to know why you're saying. If you understand the why behind what you're saying, you're going to say it in a way that evokes the right emotion, right? It's kind of like if I give an actor some lines and I give another actor the same lines, what makes it a good actor? It's them knowing why they're saying the lines and what emotion they're trying to evoke from the person that's watching the movie, right? And so you want to know why you're saying what you're saying. So the first thing is I want to make them, right now they're saying, hey, I'm good. I made some good decisions. I'm taken care of. There's no problem here. I've already provided the solution and taken care of what problem you think would persist. It's covered. I got it, right? I want them to feel good. So you want to feel, obviously they're saying, hey, I want to feel appreciated. I want to feel valid. I want to feel like affirmed that I did some good things. And so you want to do that. What you don't want to do is try to poke holes in something that somebody believes is bulletproof, right? Like, I'm going to let them feel great about it. So I do that by saying, Ashley, I just got to say, it's what they don't expect, by the way. And you make them feel really good. People buy from who they like and who they trust. You like people that make you feel good about a decision that you made. Because most of your life, most people, you're always struggling with decisions you made that you didn't think were good. That's why most people deal with shame and regret and guilt. Not that they should deal with it, but it's hard not to deal with some of that. And so when somebody comes in and they make them feel good about a decision that they made, they instantly, they like and they trust you more. So I've now kind of built a connection because remember, you cannot convince until you've connected. Until I've connected, convincing is going to fall by the wayside. It ain't going to work. But if I've connected, now I've got your hand, I've got your arm, we're locked in. Now I can walk you to where I want to walk you towards, which is what I believe and what you believe is going to be the right thing for them to do, which is to get more protection. Because nobody, looks back and says, my mom, terrible person. Like, she left me way too much life insurance. Like, my husband, like, what a jerk. Like, he just left me way too much money. Like, I don't know. I don't even know what to do. Like, nobody's going to complain about that. And most people, as we know, are either not insured or way underinsured. Okay, so let's get back to it. I've related to him. Once I've done that, I say, now, Ashley, what most clients do that I talk to that are in your same situation, that have planned ahead and have made good financial decisions, they continue to make good financial decisions. And usually what that looks like is they want to just strengthen their position. I had a client the other day, they said, Paul, listen, I'm 71 years old, probably not going to go through a midlife crisis right now. Probably not going to go out and buy a new Ferrari or Corvette. Probably not going to go switch where I live. I just want to make sure that I can strengthen the position. And what my concern about now at my stage of the game is just leaving a legacy, blessing my family, stewarding the money so I could get the whole well done, good and faithful servant. Like I've done well with what I have. And I said, Ashley, so for you, like you probably know exactly what your expenses are every month and exactly what your income is every month. It's not hypothetical, like it's the same every month. You know exactly what your disposable cash flow is. Is that fair to say? She should say yes. So I said, most clients in your situation, they're just looking to strengthen the good position they put in so that way they can leverage what they're going to leave. They can leverage their legacy. So when they're gone, they can leave more tax-free money for the family to be able to bless them, for them to use it, whether that's income replacement, whether that's setting up a college for the grandkids or kids or first house, first car. They just know that they want to leverage it. It makes no sense just to blow it, and it's better to put it in a bank account that just returns what you put in, because when you put it into a plan like this, like you've done prior, you get to actually get a great multiplier on it, and you can leverage it. And so for you, does that make sense? Is that important to you like it is about every person in your same situation? That's the key. Now let me pause and break this down a little bit more. So the next thing I move into, it's kind of like the herd concept. People want to do what people are doing. They don't want to be the outlier. They don't want to be the outcast. That's just the way people are. They just conform. That's why a person that's, if you go on the streets in Skid Row in LA, after a couple weeks, you're going to conform to the way the streets operate, the way it's handled, the value system there, like that's just what people do. And so I'm giving them an example of like, you are a special one. You've planned, you've prepared, you've done what most people don't do. But people that do what you've done, the minority that actually care and have forethought and make good financial decisions, this is what they do. They're looking to strengthen their position. Does that kind of describe you, Ashley, like it does about everybody in your situation? It's very difficult for her to say, no, I'm actually different than all the people that are really good with their money and have made good financial decisions. I actually don't do what those kind of people do. I do what the people that don't make good financial decisions do. It's hard for her to do that because I've already, understand this translates to everything. I've already set her up with a higher level version of her, an identity that she wants to live up to. Everybody wants to be the person that makes good financial decisions, right? So you got to team up. Just like a guy that's like, I don't care if I die, they can bury me in the backyard. It's like, okay, that's a low level identity. It's a low level version of you. You're not gonna look back and say, man, what a great statement I made about getting buried in the backyard. No, we all say stupid things. You've just qualified yourself as finding something stupid to say. Let me give you a higher level identity, right? It's the same kind of concept. You want to give them the highest level identity and then let them know what everybody does with that high level identity. They do this. Does that make sense for you too? Well, of course it does. All right, great. Now, if that's the case, Ashley, then what really makes the most sense is not how much protection, because the truth is anything is going to strengthen your position, whether that's 20 grand, 5 grand, 10 grand, 3 grand. It's all going to strengthen your position, leverage your legacy, and leave your family in a better position. It's all going to do. Does that make sense? She says yes. So say, given that, really what it boils down to is how much you want to afford or put aside to leverage that or to strengthen it. Would that be like $50 a month, $100, $200, $300? Whatever number they give you, you just made the sell. So if she says, I don't know, 100, okay, great. Well, let's see what 100 will get us qualified for. Okay, great news, Ashley. It looks like $100 will get you qualified for an additional $13,000, and so you can leverage that. So now when you pass away, you're gonna have, like you hope for, like you want, additional protection to strengthen the good position you've already put in place to make it, possibly go from good to great. And so now I don't know if we can qualify for the additional coverage, although you've got the $30,000 already in place. There's still qualification that has to take place for anything in addition. This is a new 13, so we'll hope that it comes back. But if it says no, we'll look at a different option. But the hope is they'll come back and say yes. So grab your driver's license. We'll see if we get you qualified, and you go right forward in doing the process. Guys, this will work a lot more than you think. So if you keep getting pushback and they say, I've already got enough coverage, already have money in the bank account, whatever it is, this works out way better. Another way you could approach it too, if they have like 30,000 in their bank account, is saying, look, most clients in your situation, if you're just going to leave that when you pass away, is that the goal? Like when you died, is the family just going to use that kind of as a life insurance? Well, yeah. You're not going to touch it, have no need to touch it before then? No, I don't. Okay. So what most clients do in your situation is they leverage it. They set their family up with a better position, and they'll use that 30,000. So walk with me here. You know, what most of them do is if they're paying $100 a month for, let's just say 30,000, every month it doesn't change your budget because your budget's fixed and it's tight, but you have this 30,000. It doesn't change that. Every month that $100 comes out of that 30,000. So if you passed away in say 2 years, that 30,000, let's just say it's 28,000, but they also have the 30,000 tax free, so they really have 58,000. So that's the way that most anybody in your situation, if the purpose is just to leave that when they pass, how can they maximize that? How can they leverage that 30 to make it more for really doing nothing? And I'll say, Ashley, this is how, the difference between those that just seem to have like a lot more left, a better financial situation, a lot of times is they leverage their money. They empower the money to go work for them. And so that's what everybody does that's wealthy. Well, guess what? Everybody wants to do the thing that all the wealthy people do, right? Say all the fit people, this is what they do. You want to identify yourself as being fit, you're more likely to do it if that's where you want to identify yourself with, right? And so that's how you handle that. I know I gave some great depth to it, but I wanted to give you the psychology behind it because it does make a big, big difference. All right, let's go through a situation where a client has, let's just say, and this is pretty common with final expense, they have to get a graded policy. I used to have clients come back and say, well, you know what? I don't want to have to wait, 2 years to pass away. And see, everything is done in the setup. Like the response you don't want, it's handled in the setup. And so if you set it up right, all the responses that you're trying to learn, how do I respond better to those? You don't have to even deal with it. You just don't get them. And so it's all about perspective and creating a good contrast. So when I'm talking to somebody, this is applicable psychology also to mortgage protection. If you're dealing with a client that, wants $500,000 to pay off their mortgage, but they're 77 and they had a heart attack 2 years ago, they really only could afford $20,000, right? So how do you get their mind right on going from here to way down here and wanting to buy way down here when expectation was way up here? So it's just changing the contrast, right? Now, how do you do that? I compare it to something that's lower. So now this looks a lot better if I'm comparing it here, not comparing it here. So the goal is I want to compare it to something down here, get them eyes off of comparing it up here, and now right here looks better, if that makes sense. And so if I'm talking to a client and, they're looking at $20,000 and they can't, die for 2 years and only pays back the money put in plus 10%. What I'll do is this. I'll say, so Ashley, listen, I've done this quite a while, and, with the heart attack you had yesterday, with the health condition, like the diabetes and all those things that kind of come into play, most clients that I talk to, they're pretty discouraged because they'll say, Paul, I know how important this is for my family. I'm not confused that this is the most important thing because there will be a day when I don't wake up and my kids are going to have to deal with the finality of me not being here. Like, I'm never going to be here. And the emotion tied to that, but also the financial part of having to cover expenses, filing expenses, take care of the odds and ends. If it's mortgage protection, I say have to deal with like maybe fixing the house up, paying the payments long enough to sell it. That way the bank's not knocking on your door in 90 days foreclosing the house because you haven't made a payment, and or you maybe have made a payment but you're getting ready to miss the payments because you got to still fix the house up and it's going to take time on the market. All these things that come in place. But they're saying, Paul, I can't. I've tried to get that peace of mind that is covered. I've tried to do the thing, the thing that reflects and magnifies the dignity I've got and the responsibility I have to take care of my kids, but I just can't. I can't get coverage. I keep getting declined. So the good news is this, Ashley, because I filled an underwriter, I'm not a captive sales rep that only uses one company, that maybe doesn't take those conditions. I look at all the carriers out there, all the guidelines, and we do have a plan that can get you some protection. And the cool thing about the product that we're going to look at, Ashley, a lot of clients, if they can, typically if they can't get a plan because they keep getting declined, the only option, which is not a great option, but it's the only option, is they'll just put money in a savings account. And they hope that they're going to live long enough where what's saved in that account becomes a big enough amount to not leave a burden. Very unstable strategy, because who knows how long you're going to live. This plan here, if you pass away, we're looking at $10,000 in coverage. And the beautiful thing is, if you die in the first 2 years, because all these plans right here have a 2-year period, if you die in the first 2 years, they're going to give all the money back just like it was put in a savings account, plus 10% interest, which is better than you could get in any brokerage account or market guaranteed. So now if you die in the first 2 years, it's still going to put you in a better position than if you were saving it. And then after the 24th month, on the 25th month, it's full coverage, the full 10 grand. That check is in the drawer. So if you pass away, it's like your kids are able to open it up, take that money, and it's going to put them in a much better position. I said, does that make sense? Well, yes. So I got them to contrast to that. It's the same thing with mortgage protection. If I'm dealing with a client that's 77 years old and they sent in a lead in the mortgage is $300,000, and they're only going to qualify or be able for $20,000. It's not what it does. Like, what it is 20 grand. That doesn't sell. What it does, and then in visualizing and imagining what it's going to do and how it's going to feel when they get that check or their kids get the check, and the problem it's going to solve, like what it does is what makes this sell. And by the way, guys, this is what makes this process enjoyable. If you're not enjoying it, it's because you're not getting into the why of the client. Think about it. When you're solving problems and you're helping people, it's invigorating. It's very fulfilling. But when you're not intentionally asking good questions and painting the right picture, and you're just trying to tell people what to do, it's not nearly as fulfilling. It's frustrating. You don't like just to speak to people. You want to ask questions and lead and guide and direct. I mean, think about, not to preach. This is, just take it as a story. But Jesus asked tons of questions. I mean, he was asking questions, getting people to come to their own thought process and realize, okay, this is the truth. Because once they come to the realization, they identify it. It makes true impact. It's more likely to be held on to and applied. Well, it's the same thing. If you're asking good questions, you'll get them to come around to it. They're more likely to hold on to that concept, and they're more likely to keep the policy. And so questions are essential. So as I go through this with this client, and I say, Ashley, for you, the mortgage is $300,000. The house is worth $450,000, so you have $150,000 in equity, right? Oh, yes, I do. Okay, Ashley, when you pass away, what do you think the kids are going to do, with the house? If they were sitting here, what do you think their plan would be? Would it be to move back in, or would it be to sell the house? Most of the time, they're going to say it would be to sell the house. Now, be clear, you're trying to get them off wanting to protect the whole mortgage. You don't want them to do that because it's going to be out of their budget. And so you're trying to get them to be okay with looking at $20,000 and get their eyes off the fact that they thought they only wanted $300,000, right? And so I say, they're going to sell the house anyway. So I say, yes. I say, got it. And they're going to get that $140,000 in equity that's there, right? And they're going to probably split it. Well, yeah. I say, okay, got it. That's what most the time it happens. It's just like that. Most kids, that's what they do. And so for you, Ashley, it's a little bit different. I've sat with 30-year-old clients today, and they got 5 kids running around the house. They pass away, they're going to want that home. The spouse is not going to be able to make the mortgage payment. The spouse doesn't want to sell the house and get the equity out just to go get an apartment. That spouse still needs to raise the kids. For you, you're at a different stage of life. The kids are grown. They have families. This is really just leaving a legacy, making sure the number one asset of how you're going to bless your kids, how you're going to leave a legacy, how you're going to, pass on, your wealth is going to be in this home. And so actually, you don't need a plan that's going to be huge and unaffordable, like $300,000. You're past that. What every client does in your situation, they just want a plan that's going to set the kids up for enough mortgage payments so that when you pass away, they're not burdened with making that payment, because they might need to come in and fix the house up. They might need to make 7-8 months of payments before it sells. You know, they don't want to fire sell it and get way less, because that's your legacy. This is like what you're leaving on. They want to be able to get the house in the right condition, be patient with the market, and get the most from it. And so maybe that's like 12 months of mortgage payments that they're going to need made that doesn't burden them. And so now when you pass away, there's 12 months of mortgage payments made. That gives them the time to breathe, to mourn, to grieve and recover, and figure out the next best move is not have the banker knock on the door in 90 days. They can sell the house and they can get that $150,000, and it's protected just like you want. So, actually I had a client today, they said, if that money doesn't go to my kids, I will roll over my grave if a banker takes that. And this is what prevents that from happening, because that happens all the time. It becomes a sell, a foreclosure, and the kids end up with nothing. And it just took a simple plan to cover a block of time to give them the time to do that. So we're going to look at a couple different options. One will be like 12 months of mortgage payments. So they have 12 months. They can fix up some of the house, get it going, and then sell it. Or like at 6 months. We'll look at 3 months. And you just kind of break it down like that. And you say, does that make sense? They'll say yes. And now you've got them off of thinking they need the whole $300,000, because you're like, you would if you're 32 and the kids are going to live here. They're going to sell it anyways, right? Now, what if the spouse is there? And you're like, well, they're not going to sell it. It's the same kind of concept. I'll say, so Mary, Bob, when you pass away, most clients, their concern is to make sure that equity is protected. It's not going to just go to the bank. Because at the end of the day, for you, Mary, that $60,000 that's in equity, it'll probably mean quite a bit to you when that income's reduced from Bob. Is that fair to assume? Like you could see that making a difference for you? Wait, absolutely. Okay, got it. So what most clients do, guys, because you don't have like 5 kids running around the house, and when you pass away, it's not like your spouse has got another 50 years. Like, hey, I'm rooting for you. Like, Mary, I'm hoping you make it to 133. But odds are against us. And so really, even the amount of time you need, income or to be replaced, all this stuff, it just goes down drastically. And so every client in your situation, they're just looking at a plan for one that's going to be affordable, because at the end of the day, the only plan that makes sense is the one that's going to be there when you pass. That's the one that you can afford until that date comes. And when you pass away, having a plan that's going to cover a block of time, that means the world. I can't tell you how many clients that it meant the world, that they did not have to even think or expend energy into what do I do to pay the payment on the house. It's taken care of. And then they can figure out their next best move. Do you guys see how that makes sense like it does for most families in the same situation? Well, yeah, I do. Great. Done. They bought your thought process. Right. And so those are a couple scenarios, guys. There's quite a few more. We're going to do this at least once a month, a classroom edition where we dive into real scenarios. That way you can study it. You can go through it. You can practice. You can role play. So the next time you get it, you've got the right understanding of why you're saying, like what you're trying to evoke, where you're trying to lead and guide them emotionally, but also practically what to say. And so I hope this served you and served you well. I love you. Make it a massive week. Hey, by the way, if you haven't signed up for National Summit, sign up. If you thought this helped you at all, like that's a submersion. Like you're going to come out thinking at such a higher level. And the truth is this, you are where you're at. I am where I'm at based off of my thought process. And you're always moving in the direction. Your life is always moving in the direction. Your business, your sales is always moving in the direction of your greatest thoughts. You want to get some great thoughts in an event where you're listening to the top of the top tell you what they're doing. And then what is it about? What's about you going out there making a decision to execute. So make a decision today to get to the event. If you've not yet done that, I promise you after 18 years, that is still the number one response I get from everybody that's on stage that was broke and now they're killing it, that was struggling and now they're crushing it, was big things happen, big decisions, big breakthrough took place at a big event. So hope to see you there. Guys, make it a massive week, and we'll see you next week. God bless you guys.